Hey everybody, this is Dave McKeever and Richard Hunley. We're brokers here in Stockton with Advance One McKeever Real Estate, and this is your weekly Ask the Broker show. The topic I wanted to discuss today with you, Richard, and everybody else out there is affordability, home buyers, affordability. Starting to get questions from some buyers who want to wait for prices to go down, or they're concerned about buying because we've had a good run up of home prices here in the last 6-7 years. So affordability comes to mind when purchasing a home in today's market. But I just read an article and I got it here with us. The National Association of Realtors has an affordability index, and it measures how affordable the market is. And what struck me as interesting is home affordability is higher today than it has been in the last 7 years, so going back to 2013.
How could that be with the higher prices?
Yeah, so prices have gone up, yet affordability is best now than it's been in 7 years. And prior to that, in the distressed market of 2010, 11, 12, 13, when we had all sorts of foreclosures and short sales and prices were really, really low, it was super affordable then, and those were probably the best affordability years. But like you said, even though prices have gone up, affordability is higher.
And how is that? How with prices high like they are, we're going straight up with prices. How is affordability still that good?
There's three main factors. One being the historically low interest rates. That's the big reason in today's market. And interest rates are around 3 to 3.25%, 3.5%, given the situation of your particular loan, And what does low interest rates have an impact on?
The payment, the ratios when they're qualifying people, and that means they can buy more home.
Yeah. So basically, the percentage of income or the percentage of the mortgage payment rather is much lower than what the income was. So, and then the third factor is they look at home prices. Now, home prices have increased, but the two first factors really offset the increase in home prices. So I'm going to throw up a chart. We'll have Matt throw it up on the screen here. This is the chart I was referring to. So today they have an affordability index of 172. And to interpret that, a value of 100 means that a family with the median income has exactly enough income to qualify for a mortgage on a median-priced home. Anything above 100 signifies that the family earning the median income has more than enough income to qualify for a mortgage loan on a median-priced home. So this number is well above 100, and so they're saying that families can, they have more than enough income to purchase that median-priced home. So that I found that is very interesting in today's market, that given home prices going up, more and more people can afford homes.
So David, what you're saying is, if a few years ago the interest rates were 6% and the house prices were down here, but even though the house prices have gone up to here and the interest rates have gone down to here, that makes up the difference, that we're more affordable now than we were just a few years ago.
Yeah.
Wow. Interest rates make a big difference.
Yeah, I mean, just last year rates were, over 4. They've come down maybe a whole percent, in prices, or in rates. If somebody's looking at buying a house, now is obviously a great time to take advantage of rates, or if you're somebody out there thinking of maybe you've outgrown your house, you want to move up to a bigger house or a better neighborhood or whatnot, like it's the perfect time to explore that as well, because now you're able to afford that leap in price versus a year ago you might not have, with rates being a whole percentage point higher. So,
or if you're like me from 5 years ago, you might be thinking about refiing, because I'm looking at probably today I could lower my interest rate, like 2%.
Jeez, you better do that.
That's quite a bit. So, yeah, then maybe I could take some money out and go spend it. Then I'll need David to sell my house for me.
That's right.
No, just kidding.
Yeah. Better go on vacation. No, I'm just kidding. We
go.
don't encourage you refining to go on vacation, okay?
Yeah.
That's my personal philosophy.
Well, that's very interesting with, that affordability, because anybody would think that today it's going to be harder to buy a house than 2 or 3 years ago. But thank you, government, for keeping the interest rates down and keeping our market going where it's going, because obviously, since the doors have somewhat opened for us in real estate, the market's taken off, and to be able to still have this affordability while we're taking off is like almost the perfect market.
Yeah, it's incredible. So with that, I'll just end the show. But I think, if you're, again, looking at purchasing a home and moving up, it's right now this season with the rates the way they are, best to explore it. So
Yep.
Thanks for watching, everybody, and thanks for listening on the podcast as well. We are here to help you. If you have any questions, our numbers are down below on the screen. We'll see you next week.